Hello and welcome to another update video about AVAX. AVAX continues to be in the same range as before. The support area remains unchanged. I want to talk to you about the structure. We've seen a marginally higher high, but not a break above the resistance line here at around $37.50. So let's talk about the structures. So in my primary scenario, when we zoom out a little bit, I still think it's very likely that we see another dip down into this yellow support area. Maybe not immediately, but possibly after a more substantial B wave here highlighted in yellow. Yeah. So the idea is that an A wave, first wave of a corrective structure, bottomed around the 23rd of January. Then the B wave might still be unfolding. I mean, maybe this was all of wave B, but it would be extremely shallow. Also, it's not clearly a three-wave move. And then I have to say, I cannot confirm that there is a B wave top until we break below support. The support level is at $29 pretty much. So once we see a break below $29, I think it opens the door to a move into the yellow support zone in wave C. And that support zone starts at 25.50, but looking at the structure, it would seem likely that the price is targeting rather the area around $20.78 to $16.89. So this is what I'm basically watching primarily, this move down, okay, in wave C. But it doesn't need to have started yet. So it's possible that this B wave extends a little bit. There's a lot of ambiguity in this structure at the moment. It's very, very corrective. So we always end up with a lot of different options from an Elliott wave point of view in a correction. Especially the current phase seems to be very, very difficult across the market. A lot of coins allow for, different interpretations, on different time frames. So anyway, this for me is the most likely scenario. A wave down, B wave up, C wave down. The main thesis is that this larger B wave, which is a correction that started around the 24th of December, is not finished yet. That's the main thesis. In an alternative perspective, it would be finished here, but I would assign lower probabilities to that. Then if we zoom into the detail, it could be that we're following the main thesis more directly, so get a more direct breakdown. Again, in this case, this B wave would have topped on the 30th of January at this swing high around $37. $37. But again, that would only be my alternative at the moment. I would need to see a break below $29.10 to confirm that. In my primary scenario on the smaller time frame, I'm looking for a break above this inverse head and shoulders pattern, in which the C wave might take us into this wide target range. It's between $43.75 and $49. The $43.75 level is very relevant, especially in a so-called ABC structure, because it would be the 100% extension level of the A wave, very common target for a C wave. If it's something more bullish, then it should really break higher, like to $47, $49, maybe even higher. If it's the yellow C wave of B, ideally, I wouldn't want it to go higher than the 1.38 extension at $49.07. So I think there is going to be additional upside momentum. If we get a break above that green line there, around $37, it's a little higher, maybe 37, 38. It's a small range, and it looks like an inverse head and shoulders pattern. But so far, it's not broken yet, but I think there is a potential. At the moment, though, we have to give the market the space that it might need to use the entire orange box, because if we then zoom into the very detailed wave count, I can see this here as potential 5-wave move up. It's not clearly 5, so for risk management purposes, I call it 3. It's not entirely clear. Anyway, this could be a wave 1 or an A wave. Then this here could be the B wave or the wave 2 pullback. Yeah, and we could break out, but I don't see the breakout yet. I don't see it yet. A break above 37, 38 would confirm that. It's possible, if we, add maybe a little bit more detail to this, that the move down might just be the smaller A wave of a correction than an overshooting B wave, and we're now coming down in wave C. But as long as it's holding $29.10, it should still be able to move higher from here. So essentially the main support level is at $29.10, $29.10. It's not an invalidation point for a move up, but it is, it's basically the level, if it breaks to the downside, that would introduce a lot of weakness, and then it typically would argue that invalidation is coming. So that's a key level there. The invalidation point, by the way, that's the other important parameter at $27.22. And breakout point is the third important parameter. As I said, it's not one particular price point. I would say we need to see a sustained break above the range of $37 to $38. That's all we can do here at the moment with this chart. It's just, as you can see, it's just moving sideways at the moment. We have to be patient, extremely boring at the moment, but hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.